Have you ever wondered how someone with just average beginnings, no big inheritance, no tech startup ended up becoming one of the richest and most respected investors in the world? What if I told you that you could learn his secrets, and they're actually quite simple? Let's sit back and imagine something for a moment. You're sitting at a kitchen table, coffee in hand. Across from you, there's an older gentleman with a warm smile and a calm voice. He's not flashy, not loud, just thoughtful. That's Warren Buffett. And he's about to tell you how he did it not with luck, but with a steady hand and timeless wisdom. Warren Buffett wasn't born into wealth. As a young boy, he delivered newspapers in Omaha, Nebraska, and he was fascinated by numbers, not the complicated ones, but the kind that helped him understand how money worked. He bought his first stock at age 11, and he still remembers what it felt like. A little nervous, a little excited. Sound familiar? But here's the beautiful part. Warren didn't try to get rich overnight. He didn't chase trends or take big risks. He did something far more powerful. He took his time, stayed curious, and followed a few simple principles that anyone can learn. That's the magic of Warren Buffett's style. It's not just for Wall Street. It's for you, me, your neighbor, your kids, especially if you're starting out and want to invest with confidence, not fear. So before we move on, let me ask you this. Would you like to learn how a regular person can build lifelong wealth, starting with just a little bit of money and a whole lot of common sense? If that's a yes, or even a maybe, drop a 1 in the comments below. I'd love to know who's here with me. In the next part, we'll unpack the actual rules. Buffett used that so clear and simple. You might wonder why no one taught you this before. And I promise, once you hear them, you'll start to see investing in a whole new light. Are you ready? Let's keep going. All right, now that we've got that first cup of coffee going and we're sitting at the table with Mr. Buffett himself in our minds, let's talk about what he actually does to build wealth. Because here's the truth. Warren's approach to investing isn't a mystery. It's not reserved for the Ivy League crowd. In fact, it's surprisingly down to earth. And if you're just starting your journey, maybe you're a little nervous about where to begin these next few minutes. Could be a turning point. Let's dig into the first 3 timeless rules Warren Buffett lives by. 4, only invest in what you understand. Warren once said, never invest in a business you cannot understand. And let me tell you a little story. Years ago, when everyone was rushing into tech stocks during the dot-com boom, Warren stayed out, reporters laughed, analysts said he was out of touch. But when that bubble burst and the market came crashing down, guess who still had his fortune intact? Why? Because he didn't invest in things that confused him. Here's how this applies to you. You don't need to know how to build a rocket ship or write computer code. You can invest in things you see and use every day. Companies like Coca-Cola, Apple, Johnson, things you understand. Take a look around your kitchen, your living room. What brands are you using? That might be your first clue. If this idea feels refreshing, drop a quick yes in the comments. It's the first step in investing with confidence. 5, think long-term, like really long-term. Buffett isn't looking to make a quick buck by next week. He's thinking years, decades ahead. He once said, if you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That's powerful, because we live in a world that's always in a hurry. But true wealth grows quietly, slowly like a tree. You water it, give it sunlight, and let it grow. Think about your retirement. Think about your children or grandchildren. Wouldn't you want your money working for you while you sleep? Warren calls this the magic of compound interest, when your money earns money, and then that money earns more. It starts slow, but over time, it becomes unstoppable. 6, be greedy when others are fearful, and fearful when others are greedy. This is one of Buffett's most famous lines, and it might just be the hardest to follow. Imagine this, the market drops. The news is full of panic. People are selling everything. That's when Warren leans in. He looks for strong companies that are now on sale. Think back to the grocery store. If your favorite cereal is 50% off, do you walk away or grab a few boxes? Investing works the same way. Buffett doesn't follow the crowd. He stays calm, watches closely, and waits for his moment. Now, you might be thinking, how do I know when to buy? That's the kind of thing we'll keep exploring together in upcoming parts. But for now, just remember, emotion is the enemy of wise investing. Stay calm, stay steady, and look at the long view. So here's a gentle nudge for today. Could you take 5 minutes, look around your own life, and ask, what do I already understand that might make a smart investment? Maybe it's a company you've trusted for years, or a product you use every day. Start there. That's how Buffett would. And before we wrap up, tell me in the comments, did one of these 3 rules surprise you or make you think a little differently? Just drop the number 4, 5, or 6, and I'll know which one sparked something in you. Coming up in the next part, we'll dive into how Buffett avoids big mistakes and how you can too, even if you're just starting with 100. Stick with me. This journey is just getting good. Let me ask you something. Have you ever made a decision too fast and then regretted it later? Maybe you bought something because everyone else was, only to realize it didn't make sense for you. Well, that happens all the time in investing. And the difference between someone who builds wealth and someone who loses sleep over their money is usually how they handle the tough moments. That's exactly what Warren Buffett's next 3 rules are all about. They aren't flashy, but they're the reason he's been able to build steady wealth, not just for himself, but for thousands of people who followed his lead. So if you're still with me, this is where it gets even more powerful. 7, avoid debt, especially credit card debt. Warren has said many times, if you're smart, you're going to make a lot of money without borrowing. And when he talks about borrowing, he means the kind that costs you like credit cards with sky-high interest rates. Let me share a quick story. Years ago, Warren was speaking to a group of college students. One of them asked him how to get rich. He paused, smiled, and said, the number one way to stay poor is credit card debt. It's like handing over your future earnings for a dinner you ate last week. Here's the deal. Credit card debt is like trying to fill a bucket with a hole in the bottom. You can't invest if your money's leaking out on interest payments. So the first thing you can do to start building wealth, pay off high interest debt. Even a few $100s at a time makes a big difference. If this hits home for you, just comment 7 below. You're not alone, and there's no shame in it. Everyone starts somewhere. 8, don't try to time the market. People often think they can outsmart the market by at the bottom, sell at the top. But Buffett, he doesn't play that game. Because timing the market is like trying to predict the weather a month from now. You might get lucky once, but over time, the odds catch up with you. Instead, Warren believes in staying consistently invested in great companies. He says, time in the market beats timing the market. That's why he recommends something called dollar cost averaging, a fancy term for putting in a little money every month, no matter what the market's doing. It takes the emotion out of it, no guessing, just steady progress. Think of it like planting a garden. You don't wait for the perfect weather to plant every seed. You plant regularly, water regularly, and let nature do the rest. 9, be patient, let your investments work for you. This one might be the hardest of all. We live in a world of instant results. We want to see our money double overnight. But Warren, he once bought shares in Coca-Cola in 1,988, and he's still holding them today. That's not boring. That's brilliant. Because over time, that investment has grown into billions. Not because he traded it every week, but because he gave it time to grow. Here's a quote I love from Buffett. The stock market is a device for transferring money from the impatient to the patient. So ask yourself, can you wait? Can you trust the process? Can you plant the seed and let it grow? If you can even a little, you're already thinking like one of the most successful investors in history. Now take a breath. Let's think about where we are. You've learned how to avoid things that drain your wealth. You're learning to stay steady, and you're learning to trust that long-term thinking pays off. That's a big shift, and I'm proud of you for sticking with me. Just drop a quick 8 or 9 in the comments if any of these rules made you stop and think. And in the next part, we'll take things even further. I'll show you how Buffett actually chooses great companies to invest in without needing a financial degree. We're just getting to the good part. Let me ask you this. Have you ever looked at the stock market and thought, how on earth do I know which company to choose? You're not alone. It can feel like standing in a giant grocery store with thousands of products, none of them labeled clearly. But Warren Buffett has a way of making it simple. He doesn't chase the hottest trends or the flashiest companies. He looks for what he calls wonderful companies at fair prices. And the beautiful thing, You don't need a finance degree or a crystal ball to follow his approach. Let's walk through the next 3 rules he lives by when choosing where to put his money. 10. Invest in what you understand. Warren once said, "Never invest in a business you cannot understand." That's not just advice, it's a life-saving rule for investors. When Buffett invests in a company, he doesn't get lost in complicated charts or hard-to-pronounce tech jargon. He asks a simple question: do I understand what this business does, how it makes money, and why it will still be strong 10 years from now? Let me give you an example. He's famously invested in companies like Coca-Cola, Dairy Queen, and American Express. Why? Because he understands them. You drink a Coke, you swipe a credit card, simple, everyday businesses that aren't going anywhere. So, next time you think about investing, ask yourself, do I use this product? Do I believe in it? Would I still use it 10 years from now? That's where the magic begins. If you've ever bought something because you knew it and trusted it, just comment 10 so I know you're with me. 11, look for a moat, a company's competitive advantage. Here's something Buffett loves: businesses with a moat. Now, this doesn't mean a castle with water around it. In investing, a moat means the company has something special that keeps competitors out. It could be a trusted brand, loyal customers, low prices, or even a secret recipe. Hello, Coca-Cola. Imagine you own a small restaurant in town. If your food is good and your prices are fair, people keep coming back. But if a new place opens next door, will they leave? Maybe, maybe not. But what if your restaurant has a signature dish no one else can match? Or you've built such good relationships that people feel at home there. That's your moat. Buffett looks for companies that are so good at what they do, competitors struggle to keep up. And the best part? You can spot these too by watching how people behave, how loyal customers are, and how consistently the company performs. 12. Buy and hold, stay the course. Once Warren finds a great company, he doesn't jump in and out like he's playing a game. He holds, sometimes for decades. Why? Because that's how real wealth grows, through the quiet power of compound interest. He once said, "Our favorite holding period is forever." Let me tell you, this is the part most people miss. They buy something, then panic when the price dips. But Buffett, he stays calm. He trusts the process. He lets time do the heavy lifting. Think of it like planting an apple tree. You don't keep digging it up every month to check if it's growing. You water it, give it sunlight, and wait. Eventually, it gives you fruit, season after season. So once you find a great investment, give it time. Let it grow. Let it serve you. That's how Warren Buffett picks his investments. It's not rocket science, it's common sense, applied with patience. You start with what you understand. You find companies with something special, and you commit for the long haul. Now, I want to hear from you. Have you ever thought about investing in a business you love and use often? Comment 11 if this idea sparks something new for you. And if you're excited to find your first moat company, just say yes in the comments. You never know who you might inspire. In the next part, we'll talk about something many beginners overlook: your mindset. Because your beliefs about money, risk, and success might be the one thing holding you back or propelling you forward. Stay with me. We're building not just financial knowledge, but confidence and calm. And the best is still ahead. Do you believe you can become a successful investor, even if you're starting late or starting small? Because if you don't believe it, no strategy in the world will work. But if you do, then everything changes. Warren Buffett didn't just build his fortune with knowledge. He built it with discipline, patience, and the right way of thinking. And that's something we all can learn, no matter our age, background, or bank account. So let's talk about 3 powerful mindset shifts that Warren Buffett lives by and how you can start using them today. 13. Embrace long-term thinking. Buffett has often joked, the stock market is a device for transferring money from the impatient to the patient. It's true. Most people want fast results. They want their money to double in a month, or they panic if a stock goes down a little. But Warren, he plays the long game. He once bought shares in a company and didn't touch them for decades, and those same shares grew into billions. Here's the thing. If you can think 5, 10, or 20 years ahead, you're already ahead of 90% of people, because wealth doesn't come from what you do quickly. It comes from what you commit to and stay with. So ask yourself, are you chasing quick wins, or are you planting seeds for a richer future? If you're choosing the long view from here on out, just type 13 in the comments so I know you're with me. 14. Don't let fear or greed rule your choices. Two emotions ruin more investors than anything else: fear and greed. When prices go up, people get greedy, they rush in without thinking. When prices fall, they get scared, they rush out and sell too soon. But Buffett, he stays calm. In fact, he says, be fearful when others are greedy, and be greedy when others are fearful. That doesn't mean you gamble. It means when the market dips and others panic, you might find your best opportunities. And when everyone's rushing to buy something because it's the next big thing, that's when you pause and think twice. Real wealth comes when you stay steady while others are spinning. One retired friend of mine said, I used to get nervous every time the market moved. Now I just smile and think Warren's probably having a good day. That mindset shift gave her peace and helped her grow her retirement portfolio better than ever before. 15. Keep learning you are your best investment. This is Buffett's favorite rule of all. He says, the best investment you can make is in yourself. Not in the market, not in real estate, in you. He reads every single day. He studies businesses, watches people, and never stops learning. He's over 90 years old and still says he's learning something new every day. So what does that mean for you? It means that every book you read, every video you watch like this, every time you ask a question, you're building wealth. Not just dollars, but wisdom. And that kind of wealth, no market crash, no inflation, no economy can take it away from you. So even if you've never invested before, even if you've made mistakes in the past, today is a perfect day to say, I'm worth investing in.